Have you ever entered a trade and immediately got stopped out? It's because you're not timing your entries correctly. In today's video, I'll show you a simple scalping trading strategy that focuses on trading with the trend. I will show you how to find long trade and short trade setups. Also, stick around for the end of the video because I'm going to backtest the strategy on 100 trades and share the results. Without further more ado, let's get right into it. First, head over to TradingView and open up your favorite asset. I'll be trading gold for this video. This strategy works best on lower time frames such as the 1 minute, 5 minute, or 15 minute. In today's video, I will be using the 5-minute time frame. We'll need 2 indicators for this strategy. Go into the Indicators tab and search for the Fibonacci Golden Wave indicator and click on this one by Flux Charts. This indicator takes that old and boring Fibonacci retracement and turns it into a continuously updating golden wave that reflects current price action. As the market moves, the golden wave automatically adjusts to the most recent highs and lows, giving you an accurate, up-to-date view of where price might pull back to. The second indicator we'll need is called liquidity grabs, and it's also by Flux Charts. I'll also leave links in the description for both of these indicators for easy access. This indicator will show you in real time when buy-side liquidity or sell-side liquidity has been grabbed. It will plot a green circle if sell-side liquidity is grabbed and a red circle if buy-side liquidity is grabbed. If you want to learn more about these 2 indicators, I'll leave links in the description of videos that explain and show all of their features. Before we can take trades with this strategy, we'll need to adjust some settings. Go into the Fibonacci Golden Wave settings and change the swing range to 15. In the liquidity grab setting, change the pivot length to 30 and the wick to body ratio to 0.2. Now that the indicators are set up properly, let me show you some bullish or long trade examples. When looking for a long trade setup, you want to first wait for a bullish liquidity grab, which will be a green circle. It's important to note that the liquidity grab must occur under the golden wave. The bullish liquidity grab indicates that buyers are aggressively stepping into the market, and we should start to look for long trades. After the liquidity grab, wait for a bullish candle to close above the golden wave. Once this happens, wait for price to retrace to the golden zone and take a long entry. Set your stop loss at the most recent low and take a 1 to 2 risk to reward trade. Here's another example of a long trade setup. Here, price is under the golden wave, and we get a bullish liquidity grab. Once price continues and closes above the golden wave, we'll wait for price to come back to the wave and take a long entry. Set your stop loss at the most recent low and take a 1 to 2 risk to reward trade. The strategy is really that simple. For bearish or short trade setups, we'll look for opposite criteria. First, wait for a bearish liquidity grab, which will be a red circle. The liquidity grab must occur above the golden wave. The bearish liquidity grab indicates that sellers are stepping into the market very fast, and we should start to look for short trades. After the liquidity grab, wait for a bearish candle to close below the golden wave. Once this happens, wait for price to retrace to the golden zone and take a short entry. Set your stop loss at the most recent high and take a 1 to 2 risk to reward trade. Here's another example of a short trade setup. Here, price is above the golden wave and we get a bearish liquidity grab. Once price continues and closes below the golden wave, we'll wait for price to come back to the wave and take a short entry. Set your stop loss at the most recent high and take a 1 to 2 risk to reward trade. Now, I will backtest this strategy on 100 trades and share the results with you guys. I will speed this part up and I'll see you guys in a minute. After testing this strategy out on 100 trades on gold, I got some very promising results with the 5-minute time frame. There were 40 winning trades and 60 losing trades for a win rate of 40%. Although this might seem low, you have to remember that the risk to reward for this strategy is 1 to 2. This means you only need a 33% win rate to break even with the strategy. The maximum number of trades won in a row was 9, and the maximum number of losing trades in a row was 6. After the 100 trades, trades, the account gained 20%, assuming a risk of 1% per trade. In conclusion, this strategy is very powerful, and if you implement strict risk management and follow all the rules, this could definitely be a winning strategy. If you have any suggestions to improve this strategy or have questions, please leave a comment below.
Also, make sure you join our Discord where we discuss trade ideas, share powerful indicators, and live stream our trading every single day. That's all for today's video. Please like, comment, and subscribe.